Hello everyone, welcome to Educare 247. This is the fourth lecture of revision series for SEBI Grade 8 2020. In our fourth lecture, we will be discussing MCQs of fiscal policy. This series is very important for your upcoming SEBI Grade A examination. You can revise all the important topic with the help of this series. So do follow our channel and subscribe to Educare 247. Fiscal policy topic is the part of finance syllabus for SEBI Grade A examination. You can check here. This topic is clearly mentioned in the SEBI Grade A 2020 syllabus. So it is going to be very important for your upcoming examination. The first question is, which of the following organization in India is responsible for fiscal policy? The answer is Ministry of Finance. Let us understand the fiscal policy. It deals with the government policy concerning changes in taxation and expenditure overheads. So basically it is about government tax and government expenditure. Government collects the taxes and government spend the money on certain projects, welfare, subsidies. So that is fiscal policy. On the other hand, monetary policy deals with changes in factors and instruments that affect the supply of money in the economy and the interest rate. So basically monetary policy is about supply of money in the economy and interest rate, and fiscal policy is about government taxation and government expenditure. So that is the basic difference between fiscal policy and monetary policy. It is very important to differentiate between these two. Fiscal policy is used by government all over the world to get the desired effect in the economy. So that is also important point. In case of India, the fiscal policy is dealt by government directly, which means Ministry of Finance. They take care of annual budget and taxation. But Reserve Bank of India, that is central bank, is responsible for the execution of monetary policy. So that is one important major difference. Monetary policy will be taken care by RBI and the fiscal policy is taken care by government directly. In India, it is Ministry of Finance. Fiscal policy is the result of several components of the policies like policy on taxation, subsidy, welfare expenditure, investment, disinvestment strategies, debt and surplus. It's all about how government is getting money and how government is spending the money. That is about fiscal policy. So this is very important concept you must remember for your upcoming SEBI examination. The next question is, during the recession, if the government raises aggregate demand by increasing expenditure is known as which kind of policy? The answer is counter-cyclical fiscal policy. Practically, fiscal policy responses using taxation and expenditure can go in two ways. The first one is counter-cyclical. A fiscal policy refers to a strategy by government to counter the boom or the recession through the fiscal measure. So basically it counters boom also and it counters recession also. During the boom phase, counter cyclical fiscal policy tries to reduce to aggregate demand by reducing government expenditure and increasing the tax level. But during the recession phase, counter cyclical policy raises aggregate demand by increasing the government expenditure and reducing the tax level. So this is overall counter cyclical policy. So basically it goes against the business cycle. If business cycle is booming, it will try to reduce the demand, but if recession is deepening, it will try to increase the demand. So it goes against the business cycle. The next one is pro-cyclical. A fiscal policy goes in line with current mode of business cycle. So basically it goes according to business cycle. During the time of boom, government makes high expenditure and does not hike the taxes, and during the recession government reduce the spending and increase the taxes, leading to further slowdown in the economy. It is very dangerous. It brings instability in the economy. So government should always take the approach to counter cyclical, not to pro cyclical. So that is very important point. You must understand this important differentiation. And in question we have asked, during the recession what government should do? So government should raise the aggregate demand by increasing the expenditure, that is counter cyclical. All right. Educare 247 has multiple courses for SEBI Grade A examination. We have comprehensive course for SEBI graded 2020. We have MCQ course for SEBI graded 2020. It is for paper 2. We have crash course for SEBI grade A. It is for phase 1 and phase 2. Here paper 2 descriptive English and GA of paper 1 is covered. Here only paper 2 is covered. In comprehensive course we have covered the complete syllabus of paper 1, paper 2, descriptive English, everything. So according to your preparation stage, you can join the courses. You can use the coupon code SEBI to get the discount on comprehensive course and crash course. There is no discount on MCQ course because it is already discounted. The next question is, the policy involves raising taxes or cutting government spending is known as which kind of policy? The answer is contractionary fiscal policy. There are three kinds of fiscal policy. Let us discuss all these three kinds of policy. The first one is neutral fiscal policy. It basically means balanced budget where government spending is equal to tax revenue, which means all the government spending is funded by tax revenue and overall the budget outcome has a neutral effect on the level of economic activity. So here tax is equal to government spending, so overall effect is neutral. The second one is contractionary or restrictive fiscal policy. Here government raises the taxes and cut the spending so that aggregate demand will go down and it also reduces the inflationary pressure in the economy. So that is second kind of fiscal policy, that is called contractionary or restrictive. In examination any word can come, so keep these two words in your mind. The another one is expansionary fiscal policy. It is generally used for giving stimulus to the economy. It speeds up the GDP growth during the recession. When growth in national income is not sufficient, government put the money, it cut the taxes and they increase their spending so that overall economy can grow. That is not a sustainable policy because government has to balance the economy. It will increase the budget deficit, which is not very advisable. So these three kinds of policy government can use. The best case scenario is neutral fiscal policy, but that is also not possible. We have to borrow money sometime and sometime we have to cut the aggregate demand and increase the taxes as well. It is very situation based thing. In economic situation government can react according to the requirement. The next question is, which of the following is not the main objective of fiscal policy? The answer is control money supply. We have discussed in our first question, controlling money supply is the main job of monetary policy. Let us discuss the main objective of fiscal policy. The first important objective is economic growth. Fiscal policy helps maintain the economy's growth rate so that certain economic goals can be achieved. The another important point is price stability. Someone can get confused. It is the main job of monetary policy because there we have to control the inflation rate. Basically it's between the both, but it is also the main job of fiscal policy because controlling the price will help to control the inflation and that is advisable for overall economic growth. So first point and second point is linked. The third important goal for fiscal policy is to achieve the full employment. There should be no unemployment in the economy and overall economic activity is increasing. So these are the main objective of fiscal policy. We have discussed the monetary policy main objective. The main objective is price stability and ensuring the economic growth as well. It's not they have to focus only on price stability, they have to ensure that economic growth is also happening. And we know that in India the RBI has the inflation target plus minus 4, basically it goes between 2 to 6. Currently our inflation target has increased above the 6 and RBI is taking control of that and they are controlling the increased inflation. So that is the important point related to fiscal policy and monetary policy objectives. Hope you have enjoyed the video. If you have enjoyed the video, like, share and comment and subscribe to Educare 247. Thank you and happy learning.